You are on the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView, and in today's video, we will be breaking down a pair both from a technical and an order flow perspective to understand where are the best probabilities for a trading opportunity on the pair to obviously be capitalizing on it. So the video will be both very educational and practical, so without further ado, let's get straight in it. Okay, so it's definitely time for an update on the situation that currently we have on GBP USD. We have spoken about GBP USD quite a few times in the past. Obviously, it is one of the most traded pairs in the market. And now the market has followed exactly what we wanted to see from our previous analysis again. So it's definitely time to make an update and see what we have at the moment on this pair and how we can be looking to capitalize on the next move for this market. Now, as usual, I will be keeping the analysis as educational as possible. So first, we will be speaking about this pair from a technical perspective. We will then go and see what we have from an order flow perspective with the commitment of traders, which is what hedge funds are currently doing in the market. And we will be following, obviously, how their orders are shifting in time. And if you are able to read how the hedge funds, basically the biggest speculators in the market, so the non-commercials, are shifting their positioning in time, you do have an advantage over your competition in the market because you get to trade alongside the biggest banks and institutions, so with the big boys in the market. Now, let's start our analysis from the monthly time frame. Now, on the monthly, what we have is a market that has just provided this W formation. Now, generally speaking, after a W formation, what you want to see is the market create a move to the downside. Specifically, what you want to see is the market create a move to the downside to complete this W formation at the neckline, which is the previous resistance, which is now turned support. And then, after a market completes a W formation at the neckline, what you expect is for the market to create the continuation to the upside for the creation of a higher high and completion of this impulse correction and impulse pattern to the upside, basically creating a higher high and completing the pattern, which is exactly what the market has been doing here. In fact, first, the market completed this W formation at the neckline and then started this continuation to the upside and printed a higher high. This is usually exactly how this pattern plays out in the market, and we can see this repeat over and over and over again. What we can also notice from a monthly perspective is that, as usual, we have an impulse and a correction. Now, if we want to measure the correction, what we have to do is take our Fibonacci from the low to the high of the impulse. Now, if we take our Fibonacci from the low to the high of this impulse, what we can see is that the market retraced exactly to the 50% of the Fibonacci taken on this impulse leg. And the reason for which this 50% stopped the market and made the market reject this area to the upside is because this 50% was lining up perfectly with the previous resistance, now turned support, which was the neckline of the pattern itself. So basically creating a confluence of support at this area from which we definitely expected the market to create this continuation to the upside. So on the monthly, everything is bullish, but there is one very important thing to notice. All this area here is very strong supply. Why it is strong supply? Because the market clearly respected it as very strong supply here, preceding all this move to the downside. Again, respected it as supply here, preceding this move to the downside, and again, respected it as supply here. And currently, we're testing this level again, and we might easily get a rejection to the downside because anyway, now the market has already printed a higher high. So it can easily reject its zone to the downside, considering that we still have 12 days and 13 hours to go before this monthly candle will close. So we still don't have a confirmed break above this supply, and the market can still easily close lower, basically respecting this area as resistance. Perfect. Now we know what is going on from a monthly perspective. Let's go down on the weekly. Now on the weekly, what we can see is that price action has been very, very clear lately. We had first this very strong impulse to the downside, followed by a correction, continuation to the downside. At that point, you have a high in the market. And as you know, a high in the market is a resistance area. The market broke above this resistance with this impulse. At that point, previous resistance is turned support. The market went and retested this new support, and at that point you expect the market to reject previous resistance, turn support, and create a move to the upside, which is exactly what the market did. And we went all the way up to test the supply that the market had at this wick. In fact, this candle here is a very strong supply zone in the market, from which we did expect the market to provide this rejection to the downside, and that is in fact exactly what the market did. And currently we are creating this continuation, completing this impulse correction and impulse pattern to the upside. Going down on the daily time frame, what do we see? Now, first of all, as we were saying at the beginning of the video, we have spoken about GBP USD quite a few times in the past. We spoke about GBP USD after this W formation. I made a full breakdown explaining all the reasons for which from here first we wanted to see this move to the downside to test this support, and from here we wanted to see this move to the upside, and that is exactly what the market did. Then when the market was here, I made another breakdown explaining all the reasons for which first we wanted to see a retracement and then this continuation to the upside, and again that is exactly what the market did. Then after this overextended W formation, I made another breakdown when the market was here, explaining all the reasons for which first we wanted to see a retracement and then the continuation to the upside for the creation of a higher high. And again, that is exactly what the market did. Then we wanted to see after the higher high, from here, the market create a move to the downside. And again, that is exactly what the market did. And with the very last analysis, I explained all the reasons for which after the break back above this support, we wanted to see a retest and a move to the upside. And that is exactly what the market has just done. But at the moment, what is next for GBP USD? Now, first of all, you will find all this previous analysis linked in description. So you find everything linked below so you can go and check it out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover or analyze in the next videos. But as I was saying, currently what we have and how we can be looking for the next opportunity for GBP USD. Now, the first thing that I want to show you before we go into the technicals on the daily time frame is what we have from an order flow perspective. Now, first of all, if you check the data for the GBP, what you are actually checking is already GBP USD. The reason for which you are already checking GBP USD is because all currencies on the spot are traded against the USD. So if you're checking GBP, you are already checking GBP USD. And what we can see is that lately net positions have been increased. In fact, we went from having minus 19.7k net positions with 47.2k shorts and 27.4k longs, all the way up to having plus 5.7k net positions with an added 2.2k longs with the previous report and 11.3k shorts closed. So we had a quite strong pound going from a negative net positioning to a positive net positioning, and we did expect the market to create this move to the upside, which is in fact exactly what the market did, because clearly institutions were buying the pound. However, what we see with the new report that was released on Friday is that hedge funds have closed 4.2k longs, meaning that during this move to the upside, they have been closing their long positions, which means that they are not really interested in the move to the upside that much anymore, and we can easily get a retracement from this impulse. Now, we don't see shorts getting added, which is obviously not very good. We would like to see longs closed and shorts added. We don't see that, but it's pretty clear that longs are being closed more than shorts, and we're having currently 31.8060 is short positions and 35k longs. So we still have more longs than shorts, but shorts currently have been decreased quite massively, but at the same time we see some profit taking on the longs, which means that hedge funds are not really interested in the shorts. They are interested in the longs, but they are creating some profit taking, meaning that in these situations what you expect is a retracement before the continuation. So at the moment, what do we have on the daily? Can we be looking to capitalize on a possible retracement? Absolutely yes. Why yes? Because we have a market which has just provided this W formation. Now, when you see a market create an impulse to the downside, followed by a retracement, a lower low and a higher high, this is called an overextended W formation. After an overextended W formation, what you want to see is the market create a retracement at least to the 0.32 of the Fibonacci taken on the impulse leg. So what we would like to see is for the market to create a retracement at least to this zone here before the continuation to the upside. So from a daily perspective, it's pretty clear that we definitely do expect the market to provide a move to the downside. Now, the way in which we will be approaching this with students is as usual being reactive and not predictive. What does it mean? Now, the monthly, weekly, and daily time frames combined with the COT data are the best time frames for the direction of the market. But when it comes to confirmations and entries, the best time frame is the 4 hours. And at the moment on the 4 hours, we can see that the market is still bullish. We have been creating higher highs, higher lows, and we can easily continue to the upside. There is no bearish momentum. The momentum is still very bullish, and we can easily create a continuation to the upside. So as we are speaking, there is no shorting opportunity that we can be looking for with students, but things might definitely change when the market will open. So what we will be doing with students is monitoring price action from a 4-hour perspective, waiting for the market to shift from a 4-hour bullish market as we have right now to a 4-hour bearish market. And if the market will shift from a 4-hour bullish to a 4-hour bearish market, at that point we will be adding GBP USD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to retrace at least to the 0.32 of the Fibonacci taken on a daily impulse. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. You find the link in the description. Is a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, take profits, as well as having me answering all your questions every single day. So I really suggest that you go and check it out, and I will see you in. The link is in the description.